Hi students, I hope you all safe and healthy with your family and friends. This video we are going to learn about 12th Standard Accountancy, Chapter 6, Comprehensive Problem, Exercise Sum number 17. Kannan, Rahim and John are partners in a firm sharing profit and losses in the ratio of 5:3:2. The balance sheet as on 31st December 2017 was as follows. The balance sheet items are liability side, capital, workman compensation fund, creditors. Asset items are buildings, machinery, debtors, stock, cash at bank, profit and loss account, loss. Apart from that, they have given additional information, that is John retires on 1st January 2018 subject to the following conditions. To appreciate building by 10%, stock to be depreciated 5%, to provide 1000 rupees for bad debts, and unrecorded liability of 8000 rupees have been noticed. The retiring partner shall be paid immediately. So from this information, what they ask, we are going to prepare revaluation account, partners capital account and the balance sheet of the firm after retirement. Let's explain the given question. Kannan, Rahim and John are partners. Okay, they share their profit and losses in the ratio of 5:3:2. The balance sheet is given below. So listen, from these three partners, among these three partners, John retired from the partnership firm on January 1st, 2018. Okay. So from this information, what they ask to prepare revaluation account and capital account and the balance sheet. We need to prepare three accounts. What are they? Revaluation account, capital account and balance sheet. Okay. So first we take revaluation account. To prepare the revaluation account, which question we have to take, whether it is balance sheet or adjustment. Always prepare the revaluation account. You have to take the adjustment. Okay. So what is the first adjustment? To appreciate building by 10%. All in the from the question on asset side, building value is given that is 90,000 rupees building value, 90,000 rupees. Here building value appreciated 10%, which means building value increased. Building belongs to which account? Building belongs to asset account. So if the building value increases, asset value also increases. So if the asset value increases, it is to be debtor, it is to be depreciated, debited. Okay. So how much building value increased? 10%. So 10% means already we have building value 90,000 rupees. So from 90,000 rupees, 10% means 10 by 100. Okay. So after cancel it, 0 cancel, 0 cancel, remaining 9,000 rupees. So building value increased 9,000 rupees. If the building value increases, it is to be debited. Okay. So building account at 9,000 rupees debited and revaluation account is to be credited. So what they ask, prepare the revaluation account. Okay. So where is the revaluation account? What you see, if they ask to prepare the revaluation account on journal entry, you have to search where is revaluation account appears. According to that, revaluation account is on credit side. So what you do, you go to credit side of the revaluation account. Listen. So you go to credit side of the revaluation account and enter by building account 9,000 rupees, which means building account increased. It is to be entered on credit side of the revaluation account. Okay. The next transaction is stock to be depreciated 5%. Stock value is 20,000 rupees given in the question on asset side. It is to be 5% depreciated. 5% means stock account decreases. Depreciated means what? Stock account decreases. Stock account belongs to asset account. If the stock account decreases, asset account also decreases. So whenever asset account decreases, it is to be credited. How much stock account given in the question? 20,000 rupees. So 20,000 rupees for 5% means 5 by 100. So 0 cancel. And another 0 cancel. 5 2s are 10. 2 0 is to be added here. 1000 rupees decreases. If the stock account decreases, it is to be credited. So stock account is to be credited how much rupees? 1000 rupees. Then which account is to be debited? Revaluation account is to be debited. Okay. So what we prepare? Now we preparing the revaluation account. So for that, where is revaluation account appears on the journal entry? It appears on which side? Debtor side. Okay. So you go to debtor side of the revaluation account. Okay. Debtor side of the revaluation account and enter to stock account. That means the opposite account you have to enter on debtor side of the revaluation account 1000 rupees entered. Okay. The next question is to provide 1000 rupees for bad debts. Okay. What bad debts belongs to which account? Bad debts belongs to debtors account. Debtors value they given in the question 30,000 rupees. Listen, bad debts we subtracted from the debtors. Okay, debtors account, if you subtracted bad debts value from debtors value decreased, right? Debtors value reduced. Why? Because you subtracted bad debts from the debtors. Okay, debtors account belongs to asset account. If the debtors account decreases, asset account also decreases. If the asset account decreases, it is to be credited. So bad debts account is to be credited 1000 rupees. Which account is to be debited? Revaluation account is to be debited. So where is revaluation account in this transactions appears? Which side revaluation account is on? Revaluation account is on debtor side. So what you have to do? You go to debtor side of the revaluation account and enter the opposite account, that is bad debts 1000 rupees entered. Okay. The next adjustment is an unrecorded liability of 8000 rupees have been noticed. Listen, liability value they forget to record it in the liability side of the balance sheet. Okay. Then after have been noticed, it is to be recorded 8000 rupees on liability side. So if the liability account unrecorded liability value 8000 rupees after noticed, it is to be entered on liability side. So unrecorded liability value is increased. If the unrecorded liability value increases, liability account also increases. Okay. If the liability account increases, it is to be credited. So unrecorded liability account credited 8000 rupees entered into the liability side of the balance sheet. And which account is to be debited? Revaluation account is to be debited. So according to this transaction of the journal entry, where is revaluation account appears? Revaluation account is appears on debtor side. So what you have to do, you go to debtor side of the revaluation account and enter the opposite account, that is which is the opposite account from the revaluation account? Unrecorded liability account. So you go to debtor side of the revaluation account and enter the opposite account, that is unrecorded liability account 8000 rupees entered. Okay. So revaluation account related transactions taken from the adjustment we entered into the revaluation account. The fifth transaction is goes to capital account. Okay, retiring partners shall be paid immediately, which is related to which account? Capital accounts. It's not entered into the revaluation account. So these four adjustment we entered into the revaluation account. Then what we have to do? We have to find out the total. How can you find out the total? Which side we have the higher value, that side we consider as the total. So let's check the debit side value. Okay, 8000 plus 1000 plus 1000, 9000, 10,000 rupees is on debtor side. Creditor side we have only one value, that is 9000 rupees. So after compare the debtor and creditor side, which side we have the higher value? Debtor side we have the higher value. So debtor side is the higher value, we assume that is called as total. So the 10,000 rupees we entered as a total. The same 10,000 rupees we enter into the same horizontal line on creditor side as a total 10,000 rupees entered. After enter the total, you have to draw the double line. Okay. So now what we have to do? We have to find out the lesser side value. Okay. Differences. Which side we have the lesser side? Credit side. If debit side we have the higher value, of course credit side we have the lesser value, right? So if you get the debit side total, you will get the credit side loss on revaluation account. How much loss you get? So we have to subtract that 9,000 lesser value from the 10,000 rupees. You will get 1,000 rupees. 3,000 rupees is called as loss on revaluation account. Again, this 1000 rupees you go to write by loss on revaluation account. Then the 1000 rupees immediately transfer into the respective partner's capital account with their profit sharing ratio. Who are the respective partners? Kannan, Rahim and Johns. Okay, that loss on revaluation account will be transferred to respective partners capital account with their profit sharing ratio. What is their profit sharing ratio? They given in the question. Listen, loss on revaluation account, how much rupees? 1000 rupees we got. Okay, the profit sharing, their profit sharing ratio is 5:2, 3:2. We have to sum up this ratio. 5 plus 3 plus 2, you will get 10. Okay, so the respective partners capital account, that loss on revaluation account transfer to respective partners capital account. Okay, so 10,000 rupees entered. The profit sharing ratio 5:3:2 will be entered on numerator. The sum of the ratio, that is we get 10. The 10 sum of the ratio you have to enter on denominator. Okay, now we have to cancel it. Okay, so 1 5 is 5, 2 5s are 10, 1 2 is 2, 5 2s are 10, right? So 5 1s are 5, 2 0 is to be added here. So this 10 for cancel for this 10. Okay, then remaining we have 1 3 is 3, 3 these 2 0 is to be added here. So 1 2 is 2, 5 2s are 10, 1 5 is 5, 2 5s are 10, 2 1s are 2, this 2 0 is to be added here. So the loss on revaluation will be transferred to respective partner capital account with their profit sharing ratio, that is we get 500 rupees goes to Kannan's capital, 300 rupees goes to Rahim's capital and 200 rupees loss on revaluation transfer to John's capital account. So we prepared the revaluation account. Okay, then we are going to prepare the capital account. What is the heading? The heading is capital account. There are two sides, debtor side and creditor side. Two sides we are going to enter particular respective partners and name, created the respective partners column and enter the rupees. Always started in capital account with opening balance. Okay, so opening balance, where is opening balance given in the question? On liability side they given the opening balance of capital account. So Kannan, Rahim, John, these three partners introduced capital respectively 1000 rupees, 1 lakh rupees, 80,000 rupees, 40,000 rupees. This is called as what? Opening balance of capital, opening capital. Okay, that opening capital will always enter on credit side of the capital account. Okay, so what you have to write? By balance brought down. Brought down denoted as what? I already explained you. Brought down denoted opening balance of the respective account. Here capital account. Okay, so their opening balance of capital account amount is 1,80,000, 40,000 entered with their respective partners column. Okay, then come to liability side of the items. They given in the question. Workman compensation fund. Listen, workman compensation fund, general reserve and reserve fund and profit and loss account. Okay, given in the liability side of the balance sheet, it will be appears on credit side of the capital. Okay, with their respective partners profit sharing ratio, we have to distribute the given amount. Okay, accordingly workman compensation fund given in on liability side, it will be entered on credit side of the capital with their respective partners profit sharing ratio. How much rupees? 30,000 rupees. Okay, so the workman compensation fund 30,000 rupees. Their respective partners profit sharing ratio is 5:3:2. So we have to it will be transferred to respective partners capital account. 30,000 into 5:3:2 enter in on numerator. Sorry. Okay, numerator. Then sum up this given ratio. Okay, 5 plus 3 8, 8 plus 2 10. That is sum of the ratio we have to enter on denominator. Noted? Okay, now we have to cancel it. Okay, 1 5 is 5, 2 5s are 10, 1 2 is 2, 15 2s are 30. Got it? So 15 into 1s are how much? 15. 30 remaining here, it will be entered here. Okay, 15,000 rupees. Similarly, 110 is 10, 3 10s are 30. Okay, so 3 3s are 9. 30 is to be added here. Okay, 9,000 rupees workman compensation fund distributed to Rahim's capital account. Then 1 2 is 2, 5 2s are 10. Okay, 1 5 is 5, 6 5s are 30. Got it? So 1666. This 30 is to be added here. Got it? So Rahim's capital 6,000 rupees transfer from workman compensation fund. So listen, workman compensation fund will be entered on credit side of the capital account. Okay, respectively 15,000 rupees goes to the Kannan's capital, 9,000 rupees goes to Rahim's capital, 6,000 rupees goes to whose capital? John's capital account entered. Okay, then come to asset side. Asset side we have profit and loss, which means if you get the profit and loss on asset side, it considered as loss. Loss will be entered on debtor side of the capital account. How much rupees? 20,000 rupees will be distributed to the respective partners account with the profit sharing ratio 5:3:2. Accordingly, the respective partners capital account, we have to distribute the loss 20,000 rupees with their profit sharing ratio 5:3:2 will be entered on numerator, and the sum of the ratio add together you will get 10. Okay, the 10 ratio, sum of the ratio 10 is to be entered on denominator. Now you have to cancel it. Okay, 1 5 is 5, 2 5s are 10, 1 2 2. For this 2 is cancelled. Okay, so listen, remaining we have 10,000 rupees. Okay, 10,000 rupees. Then 110 is 10, 2 10s are 20, 2 3s are 6. Remaining 30 we have here entered here. Okay, accordingly 110 is 10, 2 10s are 20, 2 2s are 4, 30 is to be added here, 4,000 rupees. We transfer to John's capital account from loss. Okay, so it will be entered on which side? Debtor side of the debtor side of the capital account. Okay, so 10,000 rupees, 6,000 rupees, 4,000 rupees entered on debtor side of the capital account with their respective partners account. Okay, then we get loss on revaluation account. If you get the loss on revaluation account on credit side, it will be transferred to debtor side of the capital account. Okay, so accordingly 500 rupees, 300 rupees, 200 rupees entered from credit side of the revaluation account into debtor side of the capital account we entered. Okay, then what we have to do? We have to find out the balancing figure, that means the closing balance of the capital account. So how can we find out the closing balance of the capital account? Before we are going to prepare the closing balance of the capital account, we need to calculate the total. How can we calculate the total? Which side we have the higher value, that side we assume as the total. Okay, accordingly debtor side we have 10,000 roughly. Okay, 10,500, 6,300, 4,200 rupees. Creditor side we have 1,15,000 rupees, 89,000 rupees, 46,000 rupees added together. Okay, so which after compared, which side we have the higher value? After compare debtor and creditor side we have the higher value. So creditor side we treated as the total. Okay, so we have to sum up the value and enter it as the total. 1,15,000 rupees entered, 80 plus 9,000, 89,000 entered, 40 plus 6,000, 46,000 entered. After enter the total on credit side, the same total you have to enter on in the same horizontal line on the debtor side with their respective partners column. 1,15,000 rupees, 89,000 rupees, 46,000 rupees entered on from respective partners account from creditor side to debtor side we entered. So we find out the total. Now after find out the total, we have to draw the double line. Okay. So let's come to the lesser side. Lesser side means debtor side. Higher side we have the called as creditor side. So similarly, lesser side we called as debtor side. We have the lesser value. So now we have to calculate the closing balance. Okay. So we have to subtract it to find out the difference between. So 10,000 plus 500, 10,500 subtracted from 1,15,000 rupees, you will get 1,04,500 rupees. Then 6,000 plus 300, 6,300 you have to subtract it from 89,000, you will get 82,700 rupees. 4,000 plus 200, 4,200 will be subtracted from 46,000, you will get 41,800 rupees. Listen, who is retired from the partnership firm? John retires from the partnership firm dated on 1st January 2018. So, listen, in fifth adjustment, listen here, what they given? The retiring partner shall be paid immediately. So, after find out the closing balance of the capital account, what amount we have to, that is continuous partners paid to retiring partner John, the settlement value is 41,800 rupees. That the 41,800 rupees is settlement for John, the continuous partner provided through bank, paid through bank account. Okay. So for that you are going to write, that means through check they provide, they paid settlement to retiring partner John. Okay. You have to write to bank account for 41,800 rupees immediately paid to retiring partner from the continuous partner. Okay. Then come for closing balance. Against this 1,04,500 rupees, 82,700 rupees. These two partners continue in the partnership firm. Okay. So what is their closing balance of capital account? Their closing balance of capital account value is here. Against this value you have to write to balance carried on. To balance carried on means closing balance of the capital account for the respective partner Kannan and Rahim. After find out the closing balance of the capital account for the respective partner, continuing partner, immediately it will be brought down to the opposite side. Okay, and enter below the total the same value 4 lakh, 1,04,500 rupees, 82,700 rupees entered below the total. After enter this value, you have to write by balance brought down. What is meant by balance brought down? The continuing partner Kannan and Rahim capital opening balance of the capital value is 1,04,000 rupees 500 and 82,700 for the next accounting period. Okay, this is the opening balance of the capital for the next accounting period. This continuing partners value. Okay, we prepared the capital account. Let's come to balance sheet. So balance sheet taken from where? First you have to write the heading. The heading is balance sheet as on 1st January 2018. When the retiring partners retire from the partnership firm, that date only you are going to prepare the balance sheet. Okay. So we mentioned, listen, there are two dates they have given in the question: 31st December 2017, 1st January 2018. This is their previous year's balance sheet. Okay. So when the retiring partners retire from the partnership firm, at that period only you are going to prepare that balance sheet. Accordingly, balance sheet dated on 1st January 2018, the retiring partners date is mentioned into the balance sheet. There are two sides, the liability side and asset side. Amount entered. Okay, first let's take the asset side value. Okay, so listen, Asset side they have given buildings value 90,000 rupees. It will be enter buildings value 90,000 rupees enter on inner amount column. Why? Because building value we have the adjustment 10%. We already find the adjustment. Okay. What is the building value? 9,000 rupees appreciated. Appreciated means what? We have to add the increased building value. Increased means we have to add the appreciation value with the building value. Add together you will get 99,000 rupees. Then machinery 60,000 rupees. Machinery there is no adjustment given for machinery, so you have to enter that 60,000 rupees directly in outer amount column. Then come to debtors 30,000 rupees. Debtors value you have to enter inner amount column 30,000 rupees because we have the adjustment for debtors, that is provide 1,000 rupees for bad debts. Bad debts means what? We have to subtract bad debts 1,000 rupees from the debtors value 30,000. After subtracted you will get 29,000 rupees. Then stock 20,000 rupees. Stock 20,000 rupees enter into inner amount column because we have the adjustment for stock. How much rupees? 5% stock depreciated. Depreciated means we have to subtracted. Depreciation means decreased. Subtracted. How much rupees depreciated? Stock value 1,000 rupees depreciated. Okay. So we have to subtract 10,000 rupees from 20,000 rupees stock. You will get 19,000 rupees. Then cash at bank 50,000 rupees enter into inner amount column because retiring partner, who is retired? John retiring partners, immediately the continuing partners settle the retiring partners amount through bank. How much rupees? 41,800 rupees. It will be subtracted from the bank, cash at bank. Okay. So after subtracted, you got 8,200 rupees. So asset value, asset side value, what they given in the question on asset side, accordingly we entered. Okay, we calculated. Let's come to liability side. Liability side, what they given in the question, capital account for capital account. Okay, so capital account we have to enter. This is the heading. Enter. Who is continuous partner? Kannan and Rahim. We can't take capital value from the question, balance sheet from the question. Why? Because it will be enter into capital account. When we prepare the partner's capital account, we enter that is opening capital on credit side of the capital account. So we can't enter again this value into the balance sheet. So which value you are taken as a capital on liability side of the balance sheet? This is the opening capital. After lots of adjustment, we find out the opening capital for the continuous partner. Who are the continuous partner? Kannan and Rahim. Their opening capital 1,04,500 rupees, 82,700 rupees only entered on balance sheet. Okay. Why? Because these two partners only continue in the partnership firm. Their opening balance of the capital account value is entered here. After added, you will get 1,87,200 rupees. Okay. Then sundry creditors. Creditors to 20,000 rupees we have to enter. Listen. Then an unrecorded liability 8,000 rupees have been noticed. Okay. This is from this adjustment you have to enter into the balance sheet, liability side of the balance sheet. Unrecorded liability 8,000 rupees entered. So what are the liabilities and assets items they given in the questions and the adjustment? That means the balance sheet with including the adjustment, we entered everything into the balance sheet. Now what we have to do, we are going to calculate the total asset and liability total. Listen, asset and liability total is always equal. Okay, if you can't get the equal value on asset and liability, you made some mistakes. Okay, so let's come to add the liability side value. We sum up the liability side value 1,87,200 plus 20,000 plus 8,000. You will get 2,15,200 rupees. Let's come to asset side. Sum up the values 99,000 rupees plus 60,000 rupees plus 29,000 rupees plus 19,000 rupees plus 8,200 rupees. Add together, you will get 2,15,200 rupees. So, we got asset and liability side total, same total we got. Okay. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.